Hey everybody, Trendy John here from Simpler Trading. Let's go ahead and go over NVDA. This will be a focus coming into this week. I have not touched this chart. This is simply using supply and demand. We'll put a couple few or smaller levels here for you intraday traders. But for the big picture, just want to point out we did come into my favorite place to get long on NVIDIA this year, but there is obviously room to the downside in the overall S&P futures and NASDAQ that could lead price even lower into the 90 by 75 level. So I want to point that out and not, make this sound like this is, going to be the bottom. I think it's a mature way of handling and understanding if this then that. So if price can sustain and hold above 107.22 to 95, there's a possibility that we could continue to move up towards a 133 by 143 level. The next thing that I want to show you and make you understand that this is a monthly chart. So for right now, we still have several days left until the month closes out. So we're just basing this analysis during this segment based off of the monthly chart. So far, this is an inside candle. This is a nice hammer from a demand zone. Looks really, really good. All right. But again, to the upside, lots of top and wicks, a lot of uncertainty in the market. So again, this is just a rally, if you will. One thing that I like to do is I'm going to click the wheel on our mouse, go into this thing that says Fibonacci retracements. We are going to place our fib and anchor it from this high down into this low, and I want to see where price stalled. Notice that we stalled and we are under the 38.2. So what I teach is that anytime we are moving down and we anchor those Fibonacci's here and we start to move up, that the bear channel is the 38.2 and the 23.6. So as of right now, price is still underneath the bear channel, which means still caution. So we go long from a demand zone, but these would obviously be areas where we want to trim and pull our stops up as far as the methodology is concerned. Again, to the upside, the big picture, this overall down move is not broken until the 618 is broken. However, please note that we do have a big level here that could cause prices to reject. All right, so again, the 618 is confluent. Now let's start to break it down and start to look at smaller time frames. We'll go into the weekly with you really quick. So notice here we are nice bounce into a demand zone. It worked really, really well. Again, still underneath the 38.2. Notice this gray box here. We're going to make this red to identify that this is a supply zone. We're using simply the inside and down formation or the rally base drop in here. We are being a little bit careful. So I'm putting this proximal line, if you will, a little bit down just to kind of prepare us if price were to get there. Okay. As far as targets go into this week, 123.42 and 129, both of these are going to serve as resistance until proven otherwise. And the bigger level for me that I would be super careful is going to be this red zone and also, again, confluent with the 618. Far as support goes, what we could do is look at where current price is, and as long as the 23.6 holds, which is 116.33, the idea is that price can continue to stay bid or bulls continue to show up. The next thing I can do is I'm going to do a secondary Fibonacci. So once again, we're going to pull out the next fib, and I'm just going to simply measure last week's candle. So if I do that, I want to stay long as the 38.2 holds. And when I do that, I can see that the 23.6 here on the primary and the 38.2 on the secondary are very close. I really like that. So we're going to take this off. And just a few seconds ago, I said, hey, as long as this one holds, we're going to go actually to this level here. So let's identify 38.2 and we're going to go just underneath the 50 there. And these are going to be levels to the upside, and this guy right here is going to be your support level. Let's go ahead and in the name section, I'm going to write support. And then I'm going to come over here and say on the right. This is going to show that title on the right of your line. And then let's make the width 5. Let's make it green since it's supposed to be a support level. Okay. And then we hit OK, and you're going to notice that it pops up right here. That's not a great color. Apologize. Let's just go with this one right here. All right, there's our support level. All right, so again, support, targets to the upside, also resistance, and then we have a supply zone. let's go ahead and identify the supply by annotating in here so that when price does get there, we're aware. So boom, there's supply. Couple things we need to do is let's go ahead and identify before it gets to supply. We're going to create an alert at or above, just like that. And then here on the support, we want to be right before it. We're going to create an alert at or below. And this is just letting us know, hey, price is getting close to support or price is getting close to where I would expect it to reject. Again, not to forget these two levels in here also could be areas of rejection. Okay. Let's go into a smaller time frame. So again, just kind of a top-down approach. Notice that the 200 SMA and the 50 SMA are getting very close to each other here. Take that information as you will. I'm just identifying it and showing you that it is the next target if we get above 123. This one has a lot of confluence with it. If you, again, use these levels, you can see 128.5 or so is going to be a big level for bulls to try and prove to get over. All right. So that's all I really see from a daily perspective. You could identify the gap fill down here, but we'll go ahead and move on. On the 4 hour, I like what I'm seeing here because the 4 hour is the first go-to for me where I really see trend change. And what I mean is anytime we're above it and we can stay above it and we hold and you get that confirmation that we're holding that cloud, it's a really good fun ride, stepper to the upside, if you will. And anytime we break down below the 4 hour, that thing is going to be resistance until proven otherwise. So we have made that break. We went from a red candle into a white, into a green. We got some buy signals here. And again, this is what it looks like. And the next thing that I would say is as long as the cloud holds on the 4 hour, things are looking good. As far as the trendy window goes, this worked really well this week. So if you're paying attention, this is where we get long. This is actually where I'd be looking to trim most of my position out. So we did make it from the green zone to the red zone. Okay. Now, again, if we open up and you're looking for just an intraday type day trade, for me, that 4 hour cloud needs to hold. All right. So my overall sentiment and my analysis going into NVIDIA this week is nice rally from a demand zone that was identified weeks ago. Matter of fact, months ago, and it worked really, really well. But if you're just now thinking about getting long, you really miss the idea of understanding how to identify and align yourself with the bigger money. Okay. This is where, for me, you start to hear a lot of retail, start to hear people out on X talking about it on, financial blogs and so forth. But really, why wouldn't you align yourself where prices are a lot cheaper? Okay. So again, these are the overall major levels for NVIDIA. My overall sentiment going into Monday is going to be neutral. Things look great, neutral to bullish on the 4 hour chart. But far as the daily is concerned, I say neutral again. And if we can get up and over 123.14 and hold this level, I think we can make it towards 127 to 130. That's all I have on NVIDIA. If you have any questions, please reach out to me. Have an amazing day. We'll see you in the room tomorrow.